Stock of the day is Amex. How high can the American Express stock price go? Well, in this volatile investment climate, very few stocks are establishing new all-time price highs. American Express, surprisingly, is one of those wonder shares. The Amex stock price has climbed to record highs this year despite ongoing wars, high interest rates, and tight consumer spending. Now, Amex, the credit card company you shouldn't leave home without, has been reporting record revenues and profits in the last few quarters. In 2022, for example, Amex's yearly revenue hit almost 53 billion. This figure rose above 60 billion for the very next year. Net income in 2023 surpassed 8.3 billion. So no wonder investors are flocking to buy shares in American Express. Just recently, Amex's share price briefly touched the psychological $200 level after gaining 35% in the past 3 months. Based on Amex's bullish share price momentum, it would be hard for me to think that this stock is anything else apart from a buy. That said, though, Amex's rally is, technically speaking, short-term overbought, and this means that its rally could be vulnerable to a correction from that $200 level. This level has acted as resistance in the past, and it may do so again in the future. Moreover, investors are now digesting the possibility that the Fed may not cut interest rates in March as previously assumed. This could dent market optimism and pull most US stocks lower. Not to forget are those potential credit losses due to weakening household income. And fundamentally, Amex is priced on the rosy side of the scale. Its dividend now fetches just 1.2%, and the price-earnings ratio is above 17. Over the long term, is American Express still a buy? My answer, clearly, probably yes. Just look at its long-term monthly price chart. The stock grew nearly 20 times in the past 2 decades. The stock even managed to hold on to its post-pandemic price gains despite the sharp rise in interest rates and weakening consumer spending. Yes, there are a few deep setbacks and bear trends along the way. Each time, however, the company grew stronger and its share price bounced to all-time highs as soon as the economic upswing gathered pace. Furthermore, this company has strategic cornerstone investor, Warren Buffett. Through the conglomerate Berkshire Hathaway, Warren Buffett currently owns more than 151 million shares of American Express. This 20% stake was acquired back in the early 90s for a meager $1.3 billion. This equates to a cost price of just $8. Until now, the legendary investor has not sold this extraordinarily profitable position. Dividends from his stake alone amount to more than $300 million. Based on this, the stock forecast for Amex is unsurprisingly positive, but investors are not uniformly bullish. More than a third of the current broker forecasts are in the neutral zone of hold. The median 12-month stock price forecast is aggregated at $205, where prices are trading right now. Slim upside. Perhaps the recent rally has proved stronger than expected, and analysts aren't sure if this rally can be supported by Amex's fundamentals. To sum things up, American Express is a solid company with a great brand value and solid client base. The CEO has navigated the company very well in the past 5 years and churned out record profits for shareholders. Its market cap of $145 billion is still far behind Visa, valued at $548 billion, and MasterCard at $421 billion. But trading-wise, waiting for better entry points may not be a bad idea, since the market is highly volatile if you wanted to step in to American Express. Thanks for watching, and don't forget, make sure you subscribe to Good Money Guide to get our latest stock market analysis.